All right, I hope everyone had a good month. We'll get into some numbers here. There's a few points I want to make at the end of the data, so watch the whole way through. First thing as always, let's start and take a look at the number of active listings right now. A year ago there's 1,371. Right now there's 1,386. So we're at about flat year over year, 1.1% increase in the number of active listings. For those that have been following me for a while, you know I feel like there is far too much for sale inventory on the market right now. I'm a little bit optimistic. When you look at the last 6 months, you can see we've come down off of 1,585 listings down to the 1,386 that we currently have. So I do think things are kind of moving in the right direction. If you look at the last 90 days, the number of new listings that have come to market, 310, 292, 239. It's kind of that downtrend line, which I think will help our market substantially if we can get some of this active inventory either off the market or sold out, bring us into more of a balanced marketplace. Year over year, we look at 140 sales last July and 154 sales this July. So, you know, you didn't have as much of an uptick as we would have liked to have seen. It's still an increase, still a 10% increase, but I think after seeing the 215 sales last month, I was a bit overly optimistic that we were going to keep headed in the right direction there. You know, it is a 28.4% fall off in the number of units sold from last month to this month. Take that with a little bit of a grain of salt, because a large number of those 215, or not a large number, but a decent number of those 215 came from pre-construction sales, which were loaded into the MLS towards the very end of the month. So all in all, not a terrible figure at 154, just something I really would have liked to have seen a bit stronger. So let's go ahead and move on to average price per square foot, sold prices. For those of you that are pretty new to watching me, you'll know this is just an average, right? If you tell me you're looking at waterfront Las Olas Isles, there's a pretty tight range that sells at. Versus if you're looking at a downtown condo, pretty tight range that those sell at. This is just an aggregate of a number of different zip codes in kind of a large area over Fort Lauderdale. So if you are looking at a specific subset area or a specific property type and you want me to give you a little bit more of an apples to apples comparison, please call or email me. Not a problem at all to kind of narrow it down for you. Let's look over the last 90 days. 331, 350, 373 a foot. So if you're into trends, looks like the average price per square foot is rising a little bit. For those of you that are bullish on the market, it could be a good number for you to focus on. Me, I look at the 349 from last year, 373 from this year, 7% increase. You know, overall, it's about a neutral marketplace, in my opinion, if you look at price per square foot. But again, when you dig into specific subsets, you're going to find that there are some markets that are really moving up right now, and some that are staying stagnant, and even some that are pulling back. So if you are looking at a specific area, please, again and again, I can't stress this enough, give me a call, let me know what kind of questions you have, and we can narrow it down a bit. Median pricing. Again, if you're bullish, you're going to be happy. 373 versus 419, 12.3% year over year increase in median housing pricing. I look at this moreover and say, look, the market's been comfortable somewhere between 350 and 400. When you look at all of the zip codes that I cover, that's kind of been the median number that we've stuck around at. So don't put a ton of stock in it, but again, good to see kind of if you're looking at overall trends in the market. You know, we're moving the right direction if you're bullish on the market for the last year over year anyways. Something that I am a little bit disappointed in here, and again, those of you that have been with me for a long time know I really like to focus on months of inventory. If you're new to this whole thing, what months of inventory means is if no new listings came to market today, and we just had the existing housing stock that's for sale at the existing number of sales that happened last month, this is how many months it would take to chip through that entire inventory of listed properties. It's going to favor buyers when we're higher than 6 months, favor sellers when we're lower than 6 months, and consider neutral when we're at 6 months. I was hoping to get sellers a bit more in control of this market again, and we were kind of headed in the right direction here. We went from 9.1, 7.9, 6.7. We were doing well there if you're a seller, and then because of the low sale number and the high number of active listings, we shot right back up to 9. So not what I wanted to see, but again, it's livable, it's workable. Year over year, 8.2% decrease in the amount of inventory, so that is a good signal. We just don't want to focus too much on the 34.5% increase from last month to this month. All right, on to the last slide, which I think has something kind of interesting in it for you guys. What this slide basically shows you is the number of days that it's going to take to sell a home should you put it on market, or the average number of days. You can see over the last 4 months we've been declining, right? 120, 116, 109, 104. So if you're a seller, that's good news, because we're creeping way up there. 120 days to close a deal it's a lot of days on market. So we seem to be trending in the right direction. If we can work this down below 100, I think that's a really good sign for sellers. You can see that right now we're selling at 89% of listed price. And again, if you're looking at a specific property type or price point, call and ask me. There's going to be larger discounts off listing price in the higher price that you go, the more expensive, or the larger rift you're generally going to see, where we see a really tight range in the lower dollar properties. So if you are looking at a certain price bracket or type of property, give me a call. We can kind of work through what you can expect to see if you're a seller in terms of number of days to sell, or if you're a buyer, what percentage you may expect to get off. Again, every property is individual. These are just aggregates. My final word of warning for you. A couple of things I do want to run through now that we kind of wrapped up the data, and I have some interesting stuff coming out. I have a lot of people that call and ask me for new construction, and a lot of first-time home buyers that ask where should they buy. And you're usually, if you're a first-time home buyer or you're looking in a lower-end price bracket, you're kind of hamstrung to a couple of areas of the city, and the product usually needs some kind of improvement to it. I went to go see a new construction project of townhomes in Oakland Park below $300,000 with some loft spaces priced even better than that. So I think it's a really interesting product. If you're looking at new construction, or if you're looking for something below $300,000, give me a call. I'll give you the details on it. I think it's a really interesting product, and I'd love to take you over there and take a look at it. I got a number of calls this last month from investors. Every month I get those, but these were kind of different calls. I think people are now, for the first time in a long time, starting to ask me a lot about condos. If you're an investor and you're trying to manage a unit from far away, I'm probably going to push you towards a condo, because you don't have to do as much. If you have a single family home, first things first, you got to make sure the roof is good. But remember, if you buy that single family home, you're absorbing the full cost of all repairs, or if you're in a condo, it's a shared cost. A little bit more predictable on the expense side. Even though a lot of people have shied away from condo investing, I do think it's a good idea, especially in the downtown area, which is going to bring me to my next point. I just reviewed another proposal this morning, 347 units going up in downtown, another rental project. For those people that are in rentals now, they're paying $2,500, $3,000 a month. I'm working with 2 people right now that are living in Ombre. At some point, you just have to figure you can't keep paying rent at this level. It's throwing money out the window. And I think it's going to push people into a lot of the downtown condos. So again, if you're thinking of buying, I think now is a good time to buy those well-located condos, because as we add those thousands of rental units and push thousands of people into the center of Fort Lauderdale, the existing housing stock that is for sale or that is condoed out, that's not a rental complex. I see a lot of value in that. So I do think it's a good time to act. If you're an investor and you're looking at those same condos, there's only a couple of buildings that are going to work for you. So a little bit of a difference between if you plan on living in the unit or leasing the unit out. However, I do think now is a good time to jump into this market and get off the fence if you're considering buying anything. The last thing I have for you now is tax planning. If you need to buy or sell for year end, it's time to get in gear on that. We're just a few months out from close of the year, coming into fourth quarter now. So all in all, look, if you've been on the fence, we got good news for either buyers or sellers to get off of it and get in the market. So thanks everybody for watching. Special thanks to my dogs for not barking so that I didn't have to do a second take of all of this. And we'll see you next month, guys. Have a good month.